Hey everyone, and welcome back to another video for today. So for those that missed the huge live stream, here's a quick recap of everything that happened with Nvidia's earnings report. As you can see, we have greens across the board when it comes to tech names. Yes, because of Nvidia. Because of the past couple of weeks, there were fears that, oh, it's an AI bubble. Oh, these companies are not going to see the return on investment that they're looking for. They're overbuilding, etc., etc. So yes, Nvidia's earnings report, and especially the comments that were made during the earnings call, were quite, let's say, comforting, maybe also important. If you did join the live stream, you've heard the earnings call basically, and it was more of a lesson, an educational call to Wall Street and to everyone that was listening there. Because Jensen started by talking about, well, what other companies have been seeing. For example, Meta, with regards to advertising, how they're seeing already some higher return on investment. They've talked about other companies as well. Yes, we did get Nscale, CoreWeave, Nebius name drops, and other companies as well. Other AI labs, for example, Anthropic got a name call. They did even talk a little bit about Gemini and a lot about OpenAI. So it was another one of those quarters, I would say, where, yes, the focus has, of course, been on Nvidia's quarter, which were beats across the board. Huge blowout quarter. We'll go over the numbers in a bit real quick. But it was more about, again, reaffirming what is going on right now. He said, yeah, there has been a lot of talk about an AI bubble more recently. And again, he went on to explain everything that's going on, the amount of money that's being invested, the amount of money that is going to be generated thanks to all of it, all of the industries that are going to change thanks to AI. He talked about the fact that, yes, at first, by the way, 3 years ago, ChatGPT came out, right? Only 3 years ago. So for everyone that's thinking that this is the end, it makes zero sense that in 3 years we're reaching an end of such a huge transformational technology. Now, as we've said months ago, if you do not believe in AI, then of course all of this sounds crazy, which is fine. It's your opinion. But again, going back to what he said, yes, all of the spending, everything that we've been seeing until now is from hyperscalers, mostly hyperscalers. Moving forward, it's also going to be hyperscalers, but you're going to have countries, right? You have full-on countries that are going to have their own data centers, huge clusters. We've recently heard about Saudi Arabia, we've had UAE, you have some countries in Europe as well. And all of that is, of course, adding up to the insane demand that Nvidia is already seeing right now. It's not just Nvidia, we've seen that with AMD and with some other companies out there as well, right? Their own Google, Microsoft, Amazon on their own supply, right? They say don't get high on your own supply, but in this case, they can use their own chips very well for internal workloads. But yeah, I mean, I'll say it very honestly. We've been talking about, yeah, it's fun therapy sessions, right? Everything's been read, right? This is basically what has happened over the past week. It's not fun unless you are a short seller. Then of course this is the best thing that you've seen over the past 3 years because you've been wrong for 3 years, and for the last 6 months as well. But for us investors, yeah, we are long-term investors, but we're also human, and it's not, me personally, it's not nice, right? To every day look at the market, and every day we see stocks coming down. Every day you're seeing your portfolio value come down a little bit more and more and more. At the same time, you are, of course, buying more shares of good companies because you are taking the opportunity. But on the other side, we, of course, would rather see this right now, especially, right? We would rather see this because we have been through an earnings season that has been quite good. So it's not like we've been through an earnings season and every company has missed. No, the large majority of the companies have beat the estimates and have beat it quite comfortably, and yet the stocks get punished. That's usually when I feel things are a bit unfair. But okay, fine. In the short run, the market will do what the market will do. In the long run, good companies will become bigger and the stocks will go up. Now, moving on, this is basically what we're getting right now on our watch list here. Applied Digital up 13%, Iron up 9%, CoreWeave up 8%, Nebius up 7%, BMNR up 5%, Nvidia up 5%, Rocket Lab up 4. I mean, even companies that are unrelated to data center buildouts and GPUs are up, right? Even PayPal is up 0.9% after coming down 1% on the day. I'll have a specific video talking fairly about PayPal on Thursday. But yeah, it seems like the market needed this. Again, we will still get unemployment data and I believe a GDP data as well. So that might still be in play to negatively affect the market. We're not getting, right? BLS has said that we're not going to get October jobs data because poof, in 2025 data can disappear. It doesn't make any sense, but okay. But we are going to get November one in December. Currently, the probability of a 25 basis points cut in December dropped all the way to 32%. So that can weigh on our party here heading into Thanksgiving. All right, talking about Nvidia, apologies for the huge contrast from the dark mode to now light mode. I know, I'm sorry, I apologize. But Nvidia is up a lot, so bear with me. If you do enjoy this type of videos, hit all the buttons, we really appreciate that. If you want to support me even further, do check out the link down in the description and in the pinned comment with the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. So what we've seen from Nvidia this quarter, and again, this is a company worth $4.6 trillion. Revenue increased 22% quarter over quarter, 62% year over year. Gross margin, 73.4%, net income, $31.9 billion, up 65% year over year. If we look at the outlook, $65 billion, $65 billion, well above what the market was expecting, and I'm pretty comfortable in saying that they will beat this number. Pretty comfortable saying that they will beat this number. GAAP and non-GAAP gross margins are also expected to increase quarter over quarter. With regards to a data center revenue was a record $51.2 billion, up 25%, not year over year, quarter over quarter, 66% growth year over year. So we've seen an acceleration in data center growth here. And this is basically it. Data center increased $10 billion quarter over quarter. Gaming was flat quarter over quarter, but up $1 billion or so year over year. Professional visualization up quarter over quarter very nicely and up year over year. Auto flat-ish quarter over quarter, but up year over year. So a total increase here year over year was quite significant. Again, this is a company, 4.6, now maybe a little bit more, $trillion in market cap, growing like a company that's worth $5 billion or so. I don't know why people still try to compare this to Cisco 25, 26, 27 years ago. It is not. Okay, this is a company that is generating $57 billion in revenue, growing 60+%. This is a company that is generating $22 billion or so in free cash flow a quarter. This is a company with 74% margins or so. So I don't understand why people are still trying to make the case for, oh, we are in a bubble, nothing here makes sense. Because, yeah, when you look at the numbers and you look at the size of this company, yeah, it doesn't make sense. But it's true. These are real numbers right here. And look, I understand. We've talked about Nebius, we've talked about Iron, we've talked about Applied Digital, CoreWeave. I mean, I own CoreWeave, Nebius, and Iron. I own those names. So I understand that there is some skepticism around the circular revenue, right? This whole, okay, Nvidia invests in that company gets the money, then buys back GPUs, and Nvidia basically recognizes that as revenue, but it's money that's coming out of Nvidia. But as I said time and time again, look, it's Nvidia, it's Microsoft, it's Google, it's Amazon. Those are healthy companies generating billions, tens of billions of dollars in profit, in free cash flow, that are investing in a huge ecosystem for the future. In Nvidia's case, it's to expand the CUDA ecosystem. It makes sense. It makes sense. If these weren't the companies that were investing in those smaller companies, right, the CoreWeave, the Nebius, I mean, the list goes on and on and on, then I would be more skeptical because maybe these companies are backed by companies that they themselves are not stable. They themselves are not stable enough to invest in others. But we're talking here about the largest companies of all time for now, investing in smaller companies. To me, it makes sense. We've had these conversations before on stream with Jose. Nvidia just generates too much cash. What are they going to do with it? Right? What are they going to do with that cash in order to return value to shareholders? Buybacks? Okay, they're already doing that. Dividends? They're already doing that as well. So the third option is, of course, play like a VC. Invest. Invest in smaller companies. And then, yes, get a high return on investment because these companies are becoming bigger and bigger. Yes, some of them are, if not most of them, are unprofitable today. But a lot of companies that are extremely profitable today started off unprofitable. The problem is if after a couple of years, you see no path to profitability, then yes, I would say that that is a big issue. But if there is a clear path to profitability, over time you can see that, then I don't see a reason to panic. And yes, I will say time and time again, there are companies that will go belly up. There are companies that will go bankrupt. Hopefully we don't invest in those companies, but those things happen. Every cycle, there are companies that grow, become bigger, stronger, better. And then there are other companies that just don't survive because fundamentally they are a bad business. It happens. It happens every single time. Now with Nvidia here, again, coming back to Nvidia, coming back to this whole ecosystem build out, yes, we are 3 years in. And in some cases, with CoreWeave, with Nebius, it's even less. And Iron as well, it's even less than that. But if you believe in the future that we're going to, then it's very, very early. Then it's very early. And yes, when you want to go up and to the right, if you zoom out after 10 years, you think we've gone up and to the right in a straight line. But then when you zoom in, you see that it's not really a straight line. We go up, then we go down a little bit, we go up again, but we are making higher highs. This has happened before, and it will happen in the future as well. It is normal. And by the way, the $500 billion that Nvidia projected a week or two ago, GTC-DC, right? The $500 billion in Blackwell and Rubin revenue through calendar year 2026, that projected number, it's a figure that's expected to grow. Right? This does not take into consideration the recent Anthropic announcement. This also did not take into consideration the Saudi deal or maybe UAE deal as well. So we have here a $500 billion projection in Blackwell and Rubin revenue through calendar year 2026. And that number is expected to grow. And yet, I will still find some people that think that this is all fugazi, it's a wazi, it's a woozy, it's a fairy dust. Okay, I mean, if you don't want to believe, then fine, then don't believe. That's okay. And I'll read you here a couple of things that were mentioned during the earnings call. By the way, all of this fiscal.ai, I previously FinChat, there's a link in the description if you want to use it. But you can wait a little bit because for Black Friday, there's going to be a big promotion event. So maybe wait a little bit. So Nvidia projects an annual AI infrastructure build of $3 to $4 trillion by the end of the decade, with current demand for AI infrastructure continuing to exceed expectations, as evidenced by cloud providers being sold out and Nvidia's GPU installed base being fully utilized. The company has visibility to $500 billion in Blackwell and Rubin revenue from the start of the current year through the end of calendar year 2026 with potential upside. Then, talking about the ecosystem investment and CoreWeave specifically in this case. So Nvidia's strategic investment in the AI ecosystem, including companies like OpenAI, Anthropic, Mistral, Reflection, Thinking Machines, and xAI, are integral to expanding CUDA AI ecosystem and ensuring optimal performance of AI models on Nvidia's architecture. These partnerships are designed to foster deep technical collaboration, support to accelerated growth of these once-in-a-generation companies, and secure a share of their future success. For instance, the investment in OpenAI builds on a long-standing relationship supporting their scaling efforts across cloud partners like Microsoft Azure, OCI, that's Oracle, and CoreWeave, and enabling self-built infrastructure. Similarly, the partnership with Anthropic marks their first adoption of NVIDIA architecture, with a commitment for up to 1 gigawatt of compute capacity. These investments are viewed as a disciplined approach to cash flow management, leveraging Nvidia's strong balance sheet to support growth, ensure supply chain resilience, and extend the reach and versatility of its singular AI computing platform across all industries and AI modalities. CoreWeave, as a cloud partner for OpenAI, exemplifies the broader ecosystem of GPU cloud providers that are critical to deploying and scaling AI infrastructure built on NVIDIA technology. Don't forget that you, as an NVIDIA shareholder, the fact that NVIDIA does invest in all of these companies, that means that NVIDIA believes in these companies. If these companies do become huge in the future, of course, you're going to be a huge beneficiary of that success. Don't forget, like Nvidia is not willingly giving away money because, well, it has money to burn. Yeah, maybe it has money to burn, but it's making these investments because, yes, they are seeing that in the future they'll have a huge return on investment here. And so to end this video, the implied move was 7.5% or so. Right now we're up 5.2. We'll see what happens tomorrow. Maybe macro data might impact the market again, so we might actually go lower. It's definitely a possibility. But right now, we are enjoying here a post-market, let's call it, pump across the board. Across the board, Applied Digital here is back at $26. Iron back at $50. CoreWeave back above $80. Nebius back above $100 here as well. Even BMNR is up 6%, so at $30 right now, which means it did currently rebound on that 200-day moving average. No, I don't have my 169 shares of BMNR anymore. Put it into CoreWeave, as I've said it a couple of days ago. But yeah, all in all, this is another great quarter by NVIDIA. This was another quarter where Jensen and NVIDIA are showing the world that, look, we are still early. This is still a huge revolution, and it will take years to build, and you will see the results in due time. It's too early to say that, oh, nothing is going to work out. No, there is already proof that companies are seeing massive improvements, massive efficiencies inside those companies. There is literal proof that companies that have been founded, a year, 2 years, maybe 3 years ago, have grown tremendously, right? Have become huge companies in record time. You cannot tell me that all of this is fake, because it's not. These are real companies that did not exist a couple of years ago, that do exist today, that are generating hundreds of millions of dollars in revenue, if not billions already. I believe, what did they say about Anthropic? They had $1 billion in ARR at the start of the year, now expected to exit at $7 billion or so in ARR. I mean, isn't that quite crazy? So all in all, that's about it. No, I'm not saying we're out of the woods just yet, but it is very nice to see some green. It is very nice to see some green, and again, it's green based on very good results. So that's about it for me in this video. Hopefully you enjoyed. See you tomorrow morning during the live stream. Bye bye.